This morning, we're hearing a lot more concern about higher tariffs hurting the economy after a disappointing jobs report. Private employers added just 37,000 jobs last month. We expected a lot more. In response, President Trump urged the Federal Reserve to lower interest rates. CBS News business analyst Jill Schlesinger is here. Good morning, Jill.
Good morning.
So, what exactly did the job report show?
So this is not the main government jobs report. I just want to put a pin in that because this is from ADP. It measures hiring by private employers. Sometimes the data that they report is a little different than the government. Generally speaking, they come together over time, but there can be a divergence. This was a disappointing report. I think inside of this report, although we just got 37,000 jobs created, the bigger concern is that small companies actually let people go. And I think that's an important sign that we should pay attention to. A lot of small company owners have said, these tariffs are really destroying us, and we have a hard time planning. So that's something we need to keep in mind, that small businesses under 50 employees, they're the ones that are bearing a lot of the brunt of the pressure right now.
So the big one that you're talking about comes out tomorrow. That's the one that we're all waiting for. What do we expect?
So expecting around, the estimates are all over the place. Let's say about 125,000 jobs created for the month of May. That would be lower than the previous three-month average, which is at about 155,000. The unemployment rate is expected to stay at about, let's call it 4.2%. And we're supposed to see wages increase. Remember, there's a lot of pressure building up in wages because people are saying, I have to actually pay for my groceries. I need higher wages. Wages expected to increase by about 3.7% from a year ago. That would be good news because it would be more than 1 full percentage point ahead of the inflation rate. So we'll have to see.
So let's talk about interest rates, one of our favorite topics here at the table. The president recently made a face-to-face appeal to Jerome Powell, the Fed chair, to lower rates. Why is the Fed still not doing it?
Well, remember, the Fed's got two jobs, right? This is called the dual mandate. One part of their job is, hey, make sure that there is a strong enough economy to create a job for anyone who wants a job. But the other part of their job is called price stability. Make sure that you've got inflation under control. Right now, the Fed has said, hey, we don't have enough information. We've got soft data, we have sentiment, people feel bad, but it hasn't translated into something specific. We haven't seen widespread job losses. The interesting thing about the Fed's position is, although the president is no longer threatening to fire Jerome Powell, he is certainly posting on social media. He is making his voice known. I think that from the Fed's perspective, they'll meet again in a couple of weeks. They are very clear that until they have specific evidence of a real slowdown in the economy, they're not likely to do anything. And to be clear, that may be coming, but it hasn't been hitting the data yet.
All right. Thank you for the Fed report. I've got it, at least for the next 5 minutes. I'll hold it in my head. Until next time, Jill.
Fabulous.
Thank you very much. I really appreciate it.